What's going on, everybody? Welcome to another Ticker video and welcome to the Ticker family. So the symbol we're going to be talking about today is HCMC, or Healthier Choice Management Corp. And what we're going to be talking about specifically is the file's registration statement for the rights of the offering. So we have a lot to talk about and a lot to cover, and some of the details that we're going to be talking about in this is going to be the S1, what are the rights offering and how it works, as well as the advantages and disadvantages to the shareholders. So for those that have been supporting me, guys, thank you so much. It means so much, and as you can tell, we're getting more and more people to the Ticker community, so thank you so much. And if you're new to this channel, welcome. I really do appreciate you tuning in, and as always, let's go ahead and get started. Okay, so if you're new to this channel, you'll see that there are many stocks that I talk about every single day, and I enjoy talking about them. But what I want to point out, and which I always do on all my videos, is that the stocks that I talk about, I always keep up and bring the latest information. So what I want to point out is, as you can see, just about a week ago, I updated on what's going on with HCMC, but if you actually scroll down and look a little bit further, you'll see that I've been talking about them for a while, even 3 weeks ago up to a month, just constantly updating you even with what's going on. But one thing that I like about this stock specifically is that I own shares, but the other thing is there's so many things that's always going on. It is unreal. So I just wanted to point that out. So if you are here and learning about this stock for the first time, you always can use my page on video tab as a reference. With the new catalyst that just came in, you can see, looking at this chart, there's a lot of volume that's been taking place just here recently. So if you actually check it out, you'll be able to see that we had a high, and that was in February the 11th of 0.0065. But if you actually fast forward and expand the chart, you'll be able to see just on the 16th we had a green body, which means that it closed higher than what it opened up as, like I always talk about. But as you can see, we had a wick, so there was a decent amount of trading, about roughly 5.7 million. Then you fast forward to today, you're looking at 7 billion. So what is that? What is the case? Why is it going up? What's going on, even though it's in the red? Now keep in mind what I've noticed this week and the past couple weeks. When I'm thinking of what's been going on are a few things that's affecting the market. So we've got hedge funds who are collecting cash. I mean, they are selling and trying to collect for all their shareholders. I'm thinking the financial reports for all these companies have been coming in last week and this week. So there's a lot of stocks that are either going up or going down depending on what the news is, as well as taxes. So what does taxes have to do with the charts? Well, for all these new retail investors that are starting for the first time and they've been making all this profit, they've actually have to pay the taxes. And so if you're new and you just figure that out, you might have sold some of those, right? There's individuals or a decent amount of people out there. I know I had to pay myself. And so you're going to see that people have sold some stocks, I believe, and they're paying those taxes. And so it's a whole learning experience. And so I wanted just to point that out so we can look at the chart, because as you can see, just from April the 12th all the way to the 20th, we had an upward trend, and I think it might be basis on this new catalyst news. So let's break it down. Okay, Healthier Choice Management Corp files registration statement for rights offering exclusively for its stockholders. So today, this was this morning, right before the market opened up, they announced that it filed a registration statement on Form S1 with Securities and Exchange Commission for rights offering to stockholders. Now, there's a lot that I highlighted. There's a lot of information that I need y'all to know. And so that way, again, I'm trying to save you time. And so I want to point this stuff specifically out for you. So first of all, let's look at what Form S1 is. For those that don't know, I mention it in many of my videos. But again, let's just kind of do a quick little reference just to jog our memory. Okay, so what is a SEC form, right? Securities Exchange Commission. What is the S1? So the S1 is the initial registration form for new securities for public companies that are based in U.S. Okay, any securities that meet the criteria must have an S1 filing before shares can be listed on a national exchange. All right, now the file Form S1 anticipation of the initial public offering. So the Form S1 requires companies to provide information on the planned use of capital proceeds, detail the current business model and competition, and provide a brief overall planned security itself, offering a price, methodology, and any dilution that will occur to the other listed securities. All right, so here's the key takeaways, and here's what I want you to remember. So it's an SEC registration required for U.S. companies that want to be listed on the national exchange. It is basically a registration statement for a company that is usually filed in the connection with initial public offering. Any amendments or changes that have to be made by the issuer are filed under the SEC Form S1, and the issuer is responsible for any material representation or omissions. So there's your due diligence on the S1 filings. Okay, so this is coming from the board of directors. So HCMC, they would like this opportunity to thank the valued shareholders for their support through the years. Now, this is what I highlighted, and I did not know this. They say that worth mentioning that the shareholder count is now at an all-time high that sits over 400,000 shareholders strong. The other thing is this, which I didn't know this as well, that HCMC has 124 employees, 124, who have risen to the occasion during the past year. Now, what do I want to let you know? The company is not pursuing a reverse stock split concurrently or in conjunction with the rights offering. If they would need to, it would need to be approved by shareholders owning over 50% of the common stock of the company. Now, without the majority shareholder approval, no reverse stock split can occur. Now, in effort to achieve this funding in a potentially non-dilutive manner to current shareholders, their board has decided to move forward with a rights offering exclusive for these shareholders. So, the right offering initially allows the shareholders the ability to purchase the common stock directly from the company at a discounted price. So that's what you need to remember, at a discounted price. Now, the company has retained a Maximum Group LLC to act as its exclusive financial advisor and dealer. Now, the purpose of the rights offering is to raise equity capital in a cost-effective and potentially non-dilutive manner that provides all of the existing shareholders the opportunity to participate, purchase, and own up to approximately an additional 25% of the company's common stock. Now, here's what I highlighted in green. If fully subscribed, the company will raise up to $100 million in gross proceeds. Now, let's actually look at what the rights offering is, how it works, and what are the advantages and disadvantages. So I don't know if you've noticed through most of my videos, I really like the details, everything. So just don't give me information and then not explain it to the fullest. And so this is what I like to do and this is how I break it down. So what is a rights offering? So a rights offering or rights issue is a group of rights offered to existing shareholders to purchase additional stock shares, known as subscription warrants, in proportion to their existing holders. These are considered to be a type of option since it gives a company's stockholders the right, but not the obligation, to purchase additional shares in the company, which I think is pretty interesting, and it gives shareholders a different standpoint. Now, in a rights offering, the subscription price at which each share may be purchased is generally discounted relative to the current market price, which is exactly what the news is saying. So that's what the catalyst is letting us know, and so we're still on the same page. Now, how does a rights offering issue work? So in a rights offering, each shareholder receives the right to purchase a prorated allocation of additional shares at a specific price within a specific period, usually 16 to 30 days. Now, a rights offering is effectively an invitation to existing shareholders to purchase additional new shares in the company. More specifically, this type of issue gives existing shareholders securities called rights. But until the date at which the new shares can be purchased, shareholders may trade the rights on the market the same way that they would trade ordinary shares. The right issued to a shareholder have value, thus compensating current shareholders for the future dilution of their existing shares. So what are the rights offering advantages and disadvantages? So companies generally offer rights when they need to raise money. Examples include when there is a need to pay off debt, purchase equipment, or acquire another company. In some cases, a company may use a rights offering to raise money when they have no other viable financing alternatives. So keep that in mind. Through this underwriting fees, there is no shareholder approval needed, and market interest in the issuer's common stock generally peaks. Here are the disadvantages. Sometimes rights offerings present disadvantages to the issuing company. Shareholders may disapprove because of their concern with dilution. The offering may result in more concentrated investor positions. The issuing company, in intent to raise capital, may find the additional required filings and procedures associated with the rights offering are too costly and time-consuming. The cost of the rights offering may outweigh the benefits of the cost-benefit principle, which makes total sense. So hopefully that is added value for you so you can understand even more thoroughly of this news. So for every 4 shares of common stock that you own, you will be entitled to purchase 1 share of common stock directly for the company at a discounted price. So I wanted to highlight that in green. The right is referenced to a basic right. So the purchase price will be 25% discounted to the volume weighted average. So if you hear that, the VWAP, that is volume weighted average of the sale prices of the shareholders' common stock on the OTC pink sheets. Now, the price is called actual subscription price. So by an example, the VWAP as described above is 0.0016. Your discounted actual subscription price would be 0.0012. Again, another point that I wanted to highlight is going to be, for example, if the estimated subscription price is 0.0012 and you wish to purchase 1 million shares, you will send payment in the amount of $1,200. If you submit $1,200 based on the estimated subscription price of 0.0012 and the actual subscription price drops to 0.0010, you will receive 1.2 million shares. So if the actual subscription price is to increase to 0.0014, you will receive 857,143 shares, which makes sense. So I understand that. Now, you may attempt to oversubscribe or buy more than your basic rights under the rights offering, and your request will be filed on a pro rata basis from any shares that were not purchased by other shareholders. Also, if you fully exercise your entitled allotment of shares, you will not be diluted as a result of the rights offering. Now, finishing off, the rights offering cannot commence until the Form S-1 registering the shares being sold is declared effective by the SEC. Now, we talked about that Form S-1. Now, the SEC approval proceeds to the Form S-1 typically takes anywhere from 20 to 90 days. So keep all that in mind. I feel like that was good information. I feel like that was pertinent information for someone that is a shareholder and has actual money in this company. You need to understand all this. And so this is great details, and I appreciate the transparency of them letting us know, because breaking this down gives us full understanding of what this whole entire file of this registration for the rights offering actually means. So with that being said, I really do appreciate you taking the time to listening to this video. There's more information that I'll continue to pop out as soon as I break it all down. I've got some more coming up here in the future. And with that being said, welcome to the Ticker family.